The final stock to talk about today is MMI, which of course was formed from the merger of Momentum and Metropolitan in 2010. It's engaged in a full suite of activities from life insurance, asset management, investment and healthcare administration. Employee benefits is an adjunct to that too. This is in fact Wayne McCurrie to my right's employer, so we'll have to keep that in mind. Market capitalization 37.3 billion rand, price earnings ratio 12.59, dividend yield of 6.61. Wayne, you're always very circumspect, but at the same time, you know, you're a professional investor, so you'll give them
a high dividend yield.
Yep.
The problem with MMI and virtually every essentially domestically based life assurer, you need two things to shoot the lights out for earnings to go through the roof. You need a growing customer base, and the customer base is just not growing in South Africa. There's no new jobs. And
so you're just saying universally the middle classes are a bit under
pressure.
It's
under pressure.
Yeah.
So you can't, the only way you can truly grow your slice of the pie is obviously by stealing from other people, because the pie is not getting bigger. So one year Liberty will steal, in the other year Sanlam, and in the other year MMI.
Because their salespeople are a bit more aggressive.
Or they've got a new product range that's a bit sexier and sell like that. The second thing you need is a rising equity market or good investment returns.
Because that's where you get the other stuff
That's where you get your fees and your
and you're saying that has not exactly been apparent.
Happened.
I mean, we're still sort of eking it out, but we haven't really
it's not disastrous, but I mean, the share market's done nothing for 2.5 years, and no matter where you have your assets, you still have 60% in the SA share market.
Which is why the share chart then looks like that, because it was looking good and everything was hunky-dory up until 2014, 2015. Then it started to trend sideways, and that's where the share price expectations are
specific to MMI. We have embarked on some new business ventures, very similar to Discovery, that costs you initially while you're setting it up and puts a bit of a strain on your profitability.
But fundamentally, the business has done very well. It's very well managed, and the fact that the merger costs and the synergies were extracted was why the company did well in the last 5 years, notwithstanding.
MMI, Liberty, Old Mutual's a bit different, but Sanlam, these are all good dividend yields, and I don't think the dividend's under threat. So if you want to buy, maybe waiting for the turn, and you want a good divvy, it's not a bad investment.
So you'd go hot on this one?
I won't, just because it's my own company. I can't be seen to be punting my own company.
I don't know how we're going to handle that. I'll give it a hot. I think on balance, it's at the bottom end, and I'm quite optimistic about the market outlook. Right.